Okay, so this is really, really cool. I want us all to be happy. The one guy that bought back here on March 31st or in that week of 2000 and has been stubbornly holding on, assuming he's still alive after all this time, finally has his money back. He got it a couple weeks ago. And now he's going like, this is turning out to be a pretty good trade after all. I'm up 48% since that high. So there's one guy that's really, really happy to have been a long-term holder. This is the epitome of, hey, I'm a long-term holder. I'm an investor. So the Cisco kid, boom, finally got his stuff done. Okay, now for the rest of us, okay, this thing absolutely screamed. They got a lot of, you see where this was here at 101. Now it's at, where was I, man? How come I didn't make that trade? The bottom line is this. So they got a lot of AI stuff going on, a lot of stuff, good stuff happening for Cisco, and that's fine. They got a lot of AI orders. The future's so bright. It's just they're wearing like, I don't know, like extra polarized sunglasses. Okay, fine. That was then. This is now. Let's look at the weekly chart in a little tighter time frame. Okay, this has been running up for a while. I've seen this pattern countless times. Again, this is a weekly chart. I've seen this pattern countless times. This is a long base. It goes back, a couple of years. And so this is finally breaking out. If we want to do this kind of measurement this way, I'd actually take it down to there. This is a 45%, a 45% range, I guess you'll say, but let's call it 30 bucks. So now we've got 30 bucks to the upside, and that's not, well, we'll give it some and say that's 100 bucks. So the bottom line is from pure technical analysis, measurement stuff, this is really, really overextended and it's due for a rest. Now, this is the thing that we got to be mindful of, though, the market environment. This is my the M part of my smart trading process, strategy first, and then M for market. A for actionable, it's got to be an actionable thing. And then R for risk reward, and then finally T for tracking. So we got a bunch of stuff going on here. And the first one would be like, is there a strategy that you have that works for this? And I don't know, man, I don't have much of a strategy to go up 22, 23% and buy that stock. But here's what my strategy would not be. My strategy would not be to short this stock because it's gone up enough. If you think about where this is going to open tomorrow, okay, we see what's happening post-market, but this is what it's going to look like before the open, unless you're looking at pre-market charts. This thing is going to gap up. Actually, be selling into that. They should. Typically, they should. Whenever you see, think about this as a big money manager where you've got a lot of money, you got a lot of Cisco, you got a lot of everything. Your stock's up 20% or more. People are coming in at 9:30 and they want to buy your stock. You're going to say, "Sure. I'll take that return." So you're going to be selling into that right away. But then the question is, how much demand is there for this stock? And are you, he who has boatloads of Cisco, are you going to say, holy crap, there's more demand here than I thought. Yeah, I want to sell more, but I'm not a fool. So I'm going to lift my offers. I'm going to take my stock off the market for a bit. Maybe it's going to be a minute, maybe it's going to be a day, but I'm not going to sell it right here because everybody wants to buy it, which means they'll buy at a higher price. And those are the dynamics that happen during the opening rotation. That's like the big deal that always happens. So the question is, are you going to jump on this right away in the morning and sell into this? I wouldn't do that. Re- Remember the one guy way back there, he just wants to get out of his trade. But so I wouldn't do that. I wouldn't sell into this, but I would watch it because this could very well, I mean, we don't know what's going to happen tomorrow, but this could very well turn into be a great shorting opportunity. It could. This thing could gap up here and then right away start trading below the VWAP. You get an opening range breakout to the downside. The pivot points are going to be way down here someplace. So this could really start dumpster diving right away, but it might not. And only a fool or a liar would tell you exactly what it's going to do tomorrow. And I'm neither one of those. So I just say, watch this stock, watch where it opens. Watch the first 15 minutes of trading. And if the stock is below the opening print at 945, you do not want to be long this stock. If the stock is above the opening print at 945, you do not want to be short this stock. Those are rules. Those are your rules. Okay. Now, I'm over at stockmarketmentor.com. If you're not over there, you need to get over there. And also another thing, you need to get my 59-minute trader course. That is the definitive course on this whole planet. I don't know what they're doing in other planets, but it's the definitive course on trading the opening rotation for money. We're mercenaries. I do this with our 59-minuteers. Been doing it, I don't know, a couple times a month, and we always make money. I'll say that again. We always make money. Now, I'm not guaranteeing that you will always make money, but I am telling you we always make money. So if you want to join the we, then get over to Stock Market Mentor. And if you don't have the 59-minute trader course, you need to get it. And then if you just do what I'm telling you to do what everybody else is doing, you're going to pay for the course pretty quick, and then you get it for free. Okay? That, ladies and germs, is all I have to say today. All right. Hope you're having an awesome day.